Is 2024 the year for gold?
Well, the answer is yes, and I'll tell you why. Because there are a number of factors that drive the price of gold. Of them, but just for the benefit of the viewers, you start with supply and demand. Supply has been constant. Global mining output hasn't gone up or down very much for about 6 years. It's pretty flat. Demand is going up, not because of retail. Americans don't understand it, but central banks do. And Russia, China, Mexico, Kazakhstan, Vietnam, a long list of central banks have been acquiring gold. By the way, they're acquiring more gold now because this whole treasury bill confiscation we talked about earlier. So when demand is up and supply is flat, that tends to drive prices higher.
For several months now, precious metals analysts have been talking about the importance of 2024. Rafi Farber, for instance, believes this year will mark the beginning of the financial endgame, an event that will precede the total collapse of the entire global financial system. Other analysts like Andy Schechtman believe this will be the year the BRICS Plus nations finally reveal their intentions of ending the Western hegemony by revaluing gold and silver. Jim Rickards' 2024 predictions for gold and the global financial system are slightly more nuanced, but his conclusions are similar. The renowned investment banker and media commentator is certain that this is the year for gold, as the global economy is on the verge of a major crisis. In a recent interview with ITM Trading, Jim discussed his 2024 predictions for the US economy, and by extension, the global economy and gold. Jim believes 2024 will be a year of turmoil for global economies. According to the renowned investment lawyer, the US Federal Reserve will be unable to pull off a soft landing scenario, prompting a global recession that will spread through other economies, including China, Japan, and Europe. Jim is also predicting a new regional banking crisis in the US. My overall forecast is that 2024 will be more tumultuous and shocking than 2023, Jim recently noted in a post. During his interview with Trading Incorporated, the renowned analyst also talked about the BRICS Plus nations and how they could rapidly change the status quo of global politics and economy in 2024. Jim reacted to an opinion piece that was recently published in Bloomberg. The post is titled, "The Frenemies Who Could Challenge the West's Sanctions Regime." In the opening paragraph, the author of the piece states that the BRICS bloc has few achievements to its name and has long been distinguished by a consistent failure to live up to its potential. The writer further notes that there are crippling internal contradictions and divergent interests among member states, which will make it difficult for them to develop any shared policies. Jim, a renowned economist and commentator, completely disagrees with this assessment. We will now present clips from Jim's interview. Please take a little time to share and like this video, subscribe to the channel and turn on the notifications bell for more videos like this. Thanks, and enjoy the video.
When demand is up and supply is flat, that tends to drive prices higher. So that's a good start. But the biggest factor driving gold prices recently is declining interest rates. So if you said, Jim, give me your forecast for gold, I would say, well, let's start with the forecast for interest rates. And the forecast for interest rates is they're going to drop a lot, very steeply. They already have. The yield to maturity on the 10-year note dropped from 5% to 4% in like the blink of an eye. It was like a couple of weeks in November and December. Now it's backed up a little bit. Nothing goes in a straight line. We know that. So the past couple of days, well, a week or so, the yield is kind of backed up from 3.85 to 4. But that's temporary. It's going to go to 2 or lower because now we're back to the recession. You get the kind of recession and disinflation and even deflation that I see that we're talking about, then interest rates are going to come down a lot. So I would look for the yield to maturity on the 10-year note to drop from 4 to 3 to the 2 handle. And that's going to send the price of gold a lot higher.
My question is, do you think they'll finally be taken seriously? Is there weight to the BRICS?
There's a lot of weight to the BRICS. And by the way, as far as that Bloomberg article is concerned, the facts that the reporter was reciting were correct, but they're also irrelevant. And here's why.
Yeah.
The BRICS is not a political union. It is an economic union with a focus on trade and currency. Yeah, China and India, they fought in the Himalayas. Saudi Arabia and Iran are both members. They've had their differences, et cetera. So to say there are all these political differences among the members, and it's not a perfect point is they're working on a currency union and a free trade area. and you can have that. India and China can fight over the Himalayas all they want, but if they reduce tariffs and have a common currency, that's a big deal. And as far as they've been talking about this a long time. They haven't made much progress. That's not true. They've made a lot of progress. They have the New Development Bank, which is basically a clone of the World Bank. They have the Contingent Reserve Arrangement, which is basically a clone of the IMF. They spent a lot of the last 10 years duplicating the Bretton Woods institutions under their own control and for their own purposes. So they've sort of cloned Bretton Woods in a way they control. They're building their own communications networks. And here's the big thing that, they had the August Leaders Summit where, Prime Minister Modi and President Xi Jinping and Cyril Ramaphosa and the other leaders were there. Putin had to come in by video because there's a warrant out for his arrest from the International Criminal Court. But I was one of the ones writing and talking about how it would be highly significant in terms of advancing the currency. The new BRICS currency is what we're talking about. Gold linked, by the way. Then it sort of came and went. People said, "Hey Jim, nothing happened. Like you were talking about this, and what was the big deal?" Well, they admit there was a very big deal, which was adding the new members. What's the benefit of a bilateral trading currency if it's India and China? And they agree on it's easy to invent a currency. Just pick a name and print some, and there you go. So, but if India and China had a common currency, and India shipped goods to China and got paid in that currency, what can India do with the currency? All you can do is buy stuff from China. You might need some stuff from China, but you want to go shopping everywhere else in the world. Yeah. Same thing with Russia and India. But so how do you make a currency union work? Well, the answer is you expand the membership so that when you receive the currency for your exports, you can spend it somewhere else. That's what the euro is. And the euro is 16 members. 19 members today. So the key to a successful currency union, you don't need a common fiscal policy. I mean, does anyone think Germany and Greece have the same fiscal policies?
According to Jim, China, the United States and Japan will all fall into recession in the coming months, resulting in a global recession scenario in 2024. Contrary to recent remarks by Treasury Secretary Janet Yellen, Jim believes the Fed's tightening policies won't result in a soft landing, but a severe recession that Jim reckons might already be ongoing. He points to reports about inverted yield curves, rising commercial real estate defaults, declining industrial production, declining job creation, and falling bank loans as signs of what's coming in a few months. Jim believes the crisis will spread to other economies, especially China, which, even with its stimulus reopening policies, is already showing signs of trouble. Let's get back to the interview.
The recession indicators, the long-term, when I say long-term, I mean the ones that have the best track record of being good predictors as further in advance, have been signaling a recession for a long time. So a lot of economists, and I would include myself, have said, there was going to be a recession in 2023. According to the data, that didn't happen. Maybe we fell into one around November, December. We won't know for another 4 or 5 months. We'll see what happens. But it doesn't mean that the warnings were wrong, and it doesn't mean that we won't have a recession. It just means that it has taken longer to unfold than a lot of people expected. But now those same signs are actually getting worse. I'm sure you've heard there was some very good analysis from a number of people. Jeff Snyder, Stephanie Pomboy, Sarge, Steve Guilfoyle, New York Stock Exchange, and others about how that unemployment report, the employment report that came out about a week ago, was completely misread. I mean, that was the stock market went up, unemployment, job creation exceeded expectations, unemployment remained constant. That was consistent with the happy talk, with the Goldilocks narrative, soft landing narrative, et cetera. And so kind of stocks rallied on that. But if you look behind the numbers, I mean, there are two surveys. One of them showed about 220,000 jobs created. The other one showed 1.5 million full-time jobs lost. And then there were about 700,000, a little more part-time jobs created. So if you net the two, you still lost 750,000 full-time jobs. And then, of course, part-time jobs aren't nearly as rewarding as full-time jobs. And then they'll show that, hourly wages went up. Okay, but there were fewer hours worked. That's how employers are managing the costs. Like, yeah, I'll pay a little more, but you work 30 hours instead of 40, so you're making less money. So there was, and then they gave a downward revision to the prior months. And for 12 months in a row, 11 out of the 12 months, they have downwardly revised the prior month's number. So why should we have any confidence in the 220? Because that's probably going to get downwardly revised next month. And when you're like 11 out of 12 months, that's not random. Yeah, there's a certain amount of noise in the data. Everybody understands that, but that's something seriously flawed in the model. You rolling the dice, getting a 6 11 times in a row. It doesn't happen, or it's extremely rare. So there's something wrong with the model. So there's a lot less there than meets the eye.
We have the World Bank, Jim, saying that the global economy is set for its worst half decade of growth in 30 years. So one, has the question, well, how does America get spared in all this?
Well, we have so far, but I think our luck has run out, if you want to put it that way. Germany's in recession. They just are. That data is clear, and it's getting worse. Japan is kind of right on the edge, might be in recession. UK, same thing, right on the edge. The U.S. China, saying China's in recession is probably a stretch. But if in China, if the growth goes from 10% to 7% to 5% to 4%, which it has over the last 10 years, that lost output is equivalent to a recession. China's trying to prop up their economy, so their economy is doing very poorly. When I see things like world trade contracting, it's not with the trade figures. Everyone focuses on surplus or deficit. So you have a trade surplus, your GDP goes up. You have a trade deficit, your GDP goes down. Or did the deficit shrink? That makes GDP a little higher, et cetera. Forget about that. I mean, yeah, okay, it's important data. But if you look at the top line, the exports and the imports, they're both shrinking. So whether the deficit gets a little bigger or a little smaller is less compelling, less important than the fact that both numbers are going down. World trade is shrinking. And that almost never happens except in recessions or, during the Great Depression.
During the interview, Jim also expressed strong views about another impending regional banking sector crisis in the US. Jim believes the March and April 2023 crisis will continue in 2024. He said, investors are relaxed because they believe the banking crisis is over. That's a huge mistake. History shows that major financial crises unfold in stages and have a quiet period between the initial stage and the critical stage. Jim added that this next phase of the banking crisis could snowball into a global crisis directly affecting capital markets. He predicts that stocks will perform poorly, losing up to 50% if global geopolitical conflicts escalate. In contrast, gold and silver will perform well as investors seek shelter in safe haven assets. Do you agree that 2024 will be the year for gold and silver? Please share your comments and observations in the comments section below. Subscribe to the channel and check out our other videos on gold, silver, and other precious metals. Thanks for watching.